Fantastic. Welcome here today. Andres, morning. Kevin, afternoon. Hey, Jim, good afternoon. Morning or afternoon, Brenda. All right. A lot of new names in here today. Welcome, everybody. Yeah, all over the country, all over the world, Jim, all over the world. We get them we get them every week. It's just not everybody puts it in the chat of where they're from. Hey, Steele, how you doing? Yeah, I got it, Andrew. We're gonna have no camera today. There are tax returns for 7 companies and all of the paperwork associated with it laid out behind me on desks and floors and everything else. So we're going to skip it for today. Normally, I do a really good job of getting rid of that stuff. I just had no idea where to put it where I didn't mess it up and start mingling different entities together and causing all kinds of freaking havoc. So, as we get started, keep in mind everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something that you like, anything, make sure it fits your own personal risk profile and risk tolerance. So last week we canceled Power Hour, and that's because I was traveling back from Phoenix from a family wedding on the weekend on Monday. The wedding was on the weekend on Saturday. And normally my team says, "Hey, why don't we make it Tuesday?" And I say, "Yes, of course we should make it Tuesday." And this month, though, this time I said, "Nah, we're just going to leave it." And I'm glad we did because we had a 6 a.m. flight on Monday morning that was canceled. We were put onto another flight that was pushed out and pushed out and pushed out. And then we sat on the tarmac in Phoenix for quite a while, waiting to take off, about almost an hour. And then we flew back to New York. We landed. Our gate was occupied. Then we find out that they made us land and go to a gate, which it's a 10-minute drive in JFK to get to your gate. Go to a gate that had a broken plane in it, so it couldn't be moved. So they drove us to the other side of the airport where there was traffic. And then we couldn't get in that gate. And then we sat because no one was inside to come and get us because we weren't planned to be there. So I had to move equipment around just to get us. It was disastrous. We went home. It was after 10:30 at night for what would have been a 6 a.m. flight for us. So 6 a.m., 10:30 at night, 10, 11, 12. That's 1:30 a.m. With where we came from, right? So whoosh. So I'm glad we had canceled last week, but not normally what we do. But that was the reasoning behind it. So sorry we couldn't get that one going on. Here's our agenda for today. We're going to go through our follow us page, and we're going to look at some trades from today, if you have any. Economic reports. We'll look at a review of the market. We'll look at what upcoming trains we've got going on, the weekly training topic, and then ultimately your stocks review. Uh, oh, good, Brenda. Excellent. Okay. Did you guys email that to me? Let me see. I'll bring that up in a moment. Let me see if I got something from Amelia today. I did. Okay. I'll take a look at it real quick and see if we can't pull them in. So here's our follow us page. All of the various platforms that we're on, folks, you can grab them all right here. And you can just go to any one of those names. If you go to Instagram, go to Wealth Builders HQ. If you're looking for our blog, wealthbuildershq.com/blog, Trade with Rob on YouTube, and the likes, right? So there's a lot of places that we're out there. We're adding a few more as well. So you're going to start seeing a little bit more content hit out there. But just as an FYI, right now we are at about 20 different pieces of content per day that we put out across multiple platforms. So we have someone that is dedicated to this. Her entire job is social media, AI. That's all she does. Full week. It's all she does. So there's lots and lots and lots of stuff. They take a lot of videos that I do and break them down, which is why I try to do a lot more stuff on video camera now. So we could take that and use them in other videos online that we break them into smaller pieces, but so you get the meat of it all. Today's trades. What trades did y'all do today? Drop those in. Let me know what you did. I'm just writing a note, guys. Sorry, just while the thought hit my head. All right, so let's see. Jeff said MNQ, which is the micro NQs, which is the NASDAQ futures, 5 contracts in at 9:33 and 13 seconds, out in 4 seconds, folks, 4 seconds, up $32.50. In at 9:35.39, out in 30 seconds, $45. The next one was 3 seconds for $80. Total of 9 trades in 6 minutes for $329.35 today. Total done for the day. There you go. So 6 minutes into the market, Jeff's done, and it's uh, you're on Pacific time, right? Because yeah, that's where I just came from, which was Phoenix. So you're on Pacific time right now. So that means at three. I'm sorry, 6:36 a.m. Your day was over. Nice, very nice. I love it. I love it. Um, there you go. Oh, I appreciate that, Steele. Tesla scalp, Roman said. Good job, Roman. Let's see. Still a tough morning, Trip said. Amazon scalp for 48% in 9 minutes with options expiring today. Very good. Roman did this trade right before class. Yeah, lots of congrats there, everybody. Samuel said nothing today, lost a few bucks on Friday. Yeah, nothing today for me, guys, and it's just interesting with the market. Look how wow, we've given a bunch back. If I go look at a 5 minute chart, you can see what's happened in the last just 20 minutes or so, half hour since 11:30. That gap down. I don't know what caused it on the S&P. I haven't been watching it, but we had a much nicer looking candle up at that 66.50 level, and we've which was above our fib line, not just a push in and a fail. We got above the 8 moving average and everything. So we were looking better. But that gap from where we closed to today made it difficult on my strategies to find ones that worked. I mean, Goldman Sachs, right, had an opportunity between the 817 and 836, SPY between the 651 and 660 in there, and even Tesla between the 360 and 381. I didn't take any of them at all. They were just against the grain of how I would prefer to trade. Um, right? But if we look, and I went and did some math today. Okay, maybe very careful there. I did some math today, and this month to date, we're up $8,082.36. Right? That's where we are right now, year to date, in our one contract account for power option plays. For the entire last month, we're up $8,716 for the entire month of February. So this has been a great March for us, right? And we've had our share of trades go against us, right? It's not like, I mean, you see the reds, guys. It's not like we don't have trades that we lose on, right? One trade, only one this year that was a break even. The January month was absolutely phenomenal. I mean, three months equivalent of what we've been doing right now, right? 25,853 10 for the month of January, right? So overall, real pleased with that. Same thing. We saw a bunch of trades go against us. We did have about a 2 week span where it just rocked for us, right? But if we look at last week alone, so last week would have been 16 through 20. All right, so let's see. I got a 13th in there also, but so it's all of this except the second one, which is Tesla, right? Um, which was about $500. So if we look at all of this from last week, not too shabby. One of these were not from that week. So 1, 2, 3, 4, 5, 6, 7, 8 trades last week. All one contract trades, as you can see in the stop out quantity, all one contract trades, and worked amazing. Yeah, I know, Roman. I just got another email about it today. I'm working on it again. As soon as we're done, I got to send some more data in for it. So I'm working on it, see what we can get done with that. Um, so we had some really good setups today. I mean, last week it worked extremely well. We've got some good bearish potential entries there. I don't know, with today's gap up on the S&P, how well it's going to work unless we fail at those moving averages that we were looking for. But we had 4 trade setups on pop this week, for this week: Amazon, APP, Broadcom, and Oracle. 2 earnings companies, which is Goldman and Netflix. Netflix was confirmed, Goldman was not. Still had an open bearish trade on Carvana for our full contract trades, not for our. Let me just Guys, give me 1 second. I'm just going to stop share for a moment. I have to move some tax documents that are on this computer out of the way. So let me get rid of that so they don't just start popping up. Let's see, share. Okay, so if I go over to this tracking sheet instead, here is Carvana. We're up 53.19. Last exit was 318. Right? So if I get this one off the page for now, go to Carvana. So if we stay where we are, we'll be stopped out of Carvana today. We only have one contract left on Carvana. Now I can do this here. Let's see. Oh, that's the wrong one, isn't it? Yep. Okay. There we go. So, all right. So you can see it down at the bottom there. We got one contract left. We got in at 321. Right now it's at $300. So even if we got out now, we got a $21 profit on the last contract. So I'm okay with that. And again, we could fail and fall back below that five and still be in that last contract on the trade for us. And I would be just okay, diddly fine with that if we did. You know, I will be tickle pink if we get to maintain that and keep that, right? So, but it's just really going to depend on where it closes. That's our last exit is our run. We just let that sucker run. If we get stopped out, we get stopped out. Unless you get a massive move where we jumped up to $400, we're going to be fine. Yeah, Brenda, I just haven't been able to open the email up for it yet. So, and I got to be careful not to share your email address and all of that, but I appreciate that. Um, so let's see. Yeah, it just doesn't like to play nice. If I can't, one more, maybe from there. Okay, so I've not looked at any of these, Brenda. So let's see. So this was from today, I believe, right? Let's see. 323. Yeah, so these are today. Um, so this is SPY. Let's see. The top, so 1120, the green line was the buy. So at 1120 this morning, um, the March 23rd, 663 put at 239, got out today at 11:36, so 16 minutes later at 236. 326, sorry. They're just a little small for me to read them. So almost a dollar, move 80 cents, 90 cents on that. So about $90 for one contract, more if you did more. Right. So that is fantastic. Let me see on the other one, Brenda, if I can get that one open as well. All right, let's see. Perfect. Okay, good. So let me see. Lots of trades in here overall, guys. I mean, lots and lots and lots of trades. Um, one, two, three, four trades, four entries, four exits. These are all from last week. So you could see 223, 240, 221, 258. And this is all on SPY, right? Yeah, she did all SPY here. You can see right in the middle where my mouse is. So all puts, these were all done on the 20th, which I think is Friday, right? Yeah, that was Friday. So they're all done on the 20th. Great job there, Brenda. Great job. Very much appreciated you dropping those in. Um, Goldman Sachs is now confirmed for 413. Excellent trip. I appreciate that because I did not. I only check it once a week unless I'm going to trade it. Then I go in and make a check on it. But we did well last week with trades, folks. So it's not like trades aren't happening. And everything from last week was, well, everything from the 16th to the 20th was profitable. If we look at, beyond that, we did have, there was a $2,500 hit. This is the week before, $1,600 hit. But overall, do we have trades go against us? Yes, we do. We have trades go against us all the time, right? All the time. Do we get runs when the market moves in our direction, in our favor? We get multiple movements, multiple trades. Yes, yes, and that is the diligence of being in the market. That is the ability to spot a setup that you have tested 5,000 times in the past because you just traded it over and over and over and over again, that you've got confidence. And that's the key, confidence in your setup. But Rob, what if it goes against me? That's the confidence you have to have, that you know it's going to go against you this many times out of 100, 25 times, 35 times, 42 times, 18 times, whatever it is, out of 100, it's going to go against you. So when it does, you go, okay, great. One less time it's going to go against me now because I got one out of the way. And that's the way you have to look at it. You really have to look at trading from that perspective of, I'm not going to be right all the time. Anybody that tells you that they are lies. Run as fast as you can to get the hell away from that person, right? I mean, don't get me wrong. Do some people have some amazing streaks? Yes. There's a trader out there that I know that he has had a trading room. I don't know if he still does, but he had a trading room, and he went about a full year in the trading room, live trading, without one trade going against him. He said he almost felt like just failing a trade, getting stopped out of a trade, picking a bad one on purpose because everybody was waiting for it to happen. You know, oh, maybe this is the one that goes against you, right? But is that his norm? Hell no. Is that how his actual account went for his full trading year? No, that was for the hour he was in a live trading room, right? So no, it's not how all of his trading went. It's just how that happened to work. So other than that, there was the very first company I took my education from. There was a coach out there, and his exact words were, "I have never had a trade go against me." Like, man, this guy is a god. Never had a trade go against him. You know why? He was writing covered calls. He was buying stock. He bought a stock at $80. The stock went down to 43 cents, and he never sold it. So as far as he was concerned, it never went against him. He just held on. What the hell is that? That's a load of crap. Excuse my French. Right? You are going to have trades go against you. You have to be comfortable with trades going against you. If you are not comfortable with those trades going against you, then Houston, we have a problem because it's going to happen. And the only way to really, really, really get good at this is to accept that that is part of the game. Yes, I know that trades will go against me. But if you've tested your system and you know that your system wins 6 out of 10 times, 5 out of 10 times, hell, you can win 4 out of 10 times if you have a 2-to-1 reward risk ratio. You can win only 4 out of 10 times and have a profitable system. Well, how is that? Well, if you do a 2-to-1 reward risk. Stop using the words risk reward. Reward risk. Do not put the negative word in your brain first. It's the first thing you focus on. All right? So what does that mean? Well, if you have 4 winning trades, right? That means you had an $8 reward. Well, that means you had 6 that went against you, which means on the 6 that went against you, you had a loss or a cost of $6. Well, net, you're at a +2. You're at a +2. So as long as you know your system and you can trust it, how do you trust it? You get really, really good at hitting the enter key. What do I mean by that? You need to know your system, your platform. You need to know your platform. You need to know how to maneuver in there and do things quickly that you're not making mistakes. How do you do that? Repetition. Place a lot of practice trades. Set it up. Watch what you do. Write it down. Take notes. It was easier then than it is today. What I mean by that is my first monitor, this monitor, the bezel, the little plastic on the outside of my monitor is like 1/4 of an inch. Actually, it's not even that. I just realized that I put my finger up there. It's like 1/8 of an inch. The glass is going right to on the top. The bottom's a little bit wider. It's probably about 3/4 of an inch on the bottom. Okay. But on the top, it's only 1/4 of an inch. On the sides, 1/8 of an inch rather. So 0.125. It's really small. Where it used to be 3 inches wide, right? Because there was so much big hardware in there. And we used to put stickies all over the monitor. Even on the top, it didn't come over the screen, right? We used to put stickies all over the place to notes of what you had to remember and do and so forth. And I'd lay them out in order so I could just read from one to the next to the next. So it's not as easy there, but guys, put them on the wall, put them on your desk. type it up and put it on put it on another monitor. Whatever you have to do, keep it on your phone and keep your cell phone open and look at a little checklist on your phone. But you've got a process of what to do for that trade. You've got to learn and get good at the entry component, hitting enter, right? Learning your platform. From there, it gets to a point of you've placed enough trades that have gone against you that you see that for every trade that works for you, and if you made $2, everyone that went against you, it cost you $1. Lesson, not loss. It's a lesson. It cost you $1, then you're okay. But if you treat this in such a way that everything becomes panic mode, you're not comfortable yet with your system. Doesn't mean you can't get there, but you're not there yet, right? And this is the difference of, you listen to a Tiger Woods, right? Or so Tiger Woods, we talk about chipping the ball, right? He had to chip the ball 100 times and get it in, right? And before he would stop practice. I know it was Magic, not Magic Johnson. I can't remember the basketball player's name off the top of my head. It just escapes me. But he needed to hit 100 baskets from the free throw line and or 100 baskets from the 3-point line before he would stop for the day. Right? That's what I'm talking about. It's not I'm going to spend 10 minutes. Nope, I'm doing Jordan. Thank you, Jim, Michael Jordan. Yeah, I don't know. I'm thinking Magic, and I'm like, it wasn't Magic Johnson for sure. Michael Jordan, right? I mean, that's the level of that's the difference of a great player and a good player. You could be a good player without putting all that work in. You can still be a good player, right? But you can't be a great player if you don't put it in, right? And it's that with everything that you do in life. You know, you guys see me here on a Monday. You're in some of my trainings together. Some of you I've known for a very, very, very long time, like Trip and some others in here, and Roman and I mean Scalper Ed, and there's a lot of you here. I can't see Brenda and Barry, and I mean I can't see everybody, right? Without scrolling down. I'm only up to like the B's, what I can see on my screen. Um, and so some of you know more about me than others. And I will have it all the time where people say to me, friends, colleagues, customers, students like yourselves, I don't know how you get everything done in a day. How do you do this? How do you make it happen? Guys, to live my life the way that I do, I am very diligent in how I do things with everything I do, with the exact time of wake, meals, vitamins, everything I do has a timing to it to get it all in, right? And making sure to plan what has to be done inside of there. So, business ventures, I mean, I've had 4 different companies that have hit 7 figures. Okay, it's not like I've not done this before. Success breeds success. You've got to have a systematic approach to what you do at whatever is important to you, whether it is the stock market, whether it is rebuilding car, it doesn't matter. Being the best baseball coach you can for your daughter's baseball team or your son's soccer team, or being the best at jujitsu. My son-in-law is multiple black belts in jujitsu, right? Why? Because he busted his hump to get there, right? I have zero fear with my daughter with him, none whatsoever. He's strong as an ox on top of that. So, yes, Amelia, he was. Um, what do I got here? Steele said, what I don't like is when they go against me and stop me out, then go back where I expected, and I am not in it any longer. I get that, Steele. I mean, it hurts. It really does. Right, Jim. I've got a system for my day. I have a system for my life. All right. And I had to because my life was very unbalanced or imbalanced when I first started trading. I spent zero time with family and all my time on trading because I wanted that so bad. And that was because I was very limited to hours. I was working 12 to 16 of them a day already, right? I was working 12 to 16 of them a day already. And there was nothing available for me. It just wasn't there, right? So I had to make adjustments so that I didn't put everything into it. But my wife knew at that time that I was going to spend the next 6 to 12 months fully immersed in the market to learn this stuff. And that's exactly what I did. That was me coming home from work at 8 o'clock at night and getting on a Long Island Railroad train, going into Manhattan, getting on a New York City subway and so it was 45 minutes by Long Island Railroad, 40 minutes. another 20 minutes, 25 minutes on New York City subway, two of them, to go uptown to where my mentor, Vaskin, lived, go to his house. Now I'm getting to his house 9, 10 o'clock at night, spending an hour or two coming back home with the same trip back home, right? And then the next day getting up to, leave the house at 6, 6:30 in the morning, and go to work again and do it all over again, right? So did I see my family? Hardly, right? Guys, my work schedule meant, and that was not the market. That was my work schedule meant when I went to work, my oldest daughter, which the only one we had at the time, was asleep. When I came home at night from work, she was asleep. So I hardly saw her. All right. Something had to change. And it was a conscious decision to make it happen for me. Right. You can make that change. You can make that happen, but you've got some serious work to do for some people to get there. For others, you're a lot further along. Right. Um, all right. So let me bring back up presentation mode. Let's go look at economic reports. All right. So Forex Factory. Da, 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 da. I'm pleased to report that the United States and the country of Iran have had, over the last 2 days, very good, productive conversations regarding a complete and total resolution of our hostilities in the Middle East based on the tenor and the tone of these in depth. Okay, well, I guess that was good, right? Not what I wanted to see. Let's see what show more means. I don't normally go to this on Truth Social. Okay. Um, I've had the Department of War postpone any and all military strikes against Iranian power plants. That would have been bad, guys. I mean, I don't know. I'm a little mixed on the power plants if it was going to affect regular citizens. Subject to the success of the ongoing meetings and discussions. Thanks for your attention. Okay, so was this a threat of, we're going to do this if you don't, but not really intent to? I don't know. We don't have a whole lot of reports this week. I'm surprised we don't have Trump on schedule already somewhere that they've posted, that he's announced that he's going to talk to the country. I'm surprised he hasn't done more of that through some of this. But we got nothing really happening today. Tomorrow, 9:45 a.m., and I talked about these in our weekend update, the Traders Market Intelligence Report. These are all A reports, or number one reports, primary, big reports. Well, I mean, the Richmond manufacturing happens when the market's open, but it is orange, right? So I'm not as concerned with that one. But PMI, Purchasing Managers Index, yeah. I mean, I bought gas in my truck this weekend. It's the first time I filled up. The last time I got gas, it was at $2.78 at Costco, and I paid $3.69 this weekend. It was the first time that I hit like almost $60, $58 or something for gas, and I can't remember how long. So purchasing managers, what is it costing us is going to be big. Unemployment claims coming out on Thursday. Big report, but pre-market. So Jeff could be affected because of futures if he's trading them there. And then 10 o'clock, you've got consumer sentiment coming out on Friday. It is 10 o'clock, but it's an orange report. Oh yeah, Brenda, I heard about LaGuardia Airport. My daughter has friends coming in today that it's just crazy. And this takes us, yeah, I didn't see it then, Brenda. Thank you for that. That you said he spoke this morning. This takes us back to the government shutdown. If it's not just TSA, if it's air traffic controllers, which they said that was where the fault was. I don't know, good or bad. It's just the one story that I read. Um, so we'll see. Yeah, good point, Trip. Lots of FOMC blathering this week. I saw, goodness gracious, I'm just drawing a blank who it was last week on one of the news channels over the weekend, that he was originally gonna dissent, but now he's not sure. Yeah, Waller. Thank you, Trip. It was Waller. And he's really stepped his game up with the new Fed coming in. I think he's trying to get some visibility there, which is from a political standpoint smart, I guess. Um, Barry said the one good thing about the higher oil prices, recyclers can get more for their recycled plastics when the price of oil and natural gas are high. Yeah, so the one good thing about the price of oil right now is a friend of mine owns a bunch of oil wells. I've got a whole group of friends that own them, but they're wells that it needs to be at like $75 a barrel or above, or else they don't even bother taking it out of the ground because they only get, on the average well, they get maybe 25 or 30 gallons a day. They're kind of leftover wells. And right now they're cranking. and they're getting every last drop they can a day out of there. They're down there just massively deep in the ground, right? So there are positives to everybody's pain or somebody's pain can bring pleasure or positive somewhere else, right? The plane crash and who was that this morning? Was it a major airline? Who was it in LaGuardia that crashed? What airline? Yeah, the postponement is for 5 days. Air Canada. Okay, so thank you for that, guys. I don't know. I don't even know if they're a publicly traded company, but you get companies like Delta, American Airlines, whomever. You're going to see, prices plummet. Well, that's bad for them, but hell yeah, if I'm a trader, that could be really, really, really good for me, right? If I'm a trader. So it's all a matter of perspective. It's how you see it. Okay. All right. So there's our economic reports. So market review. Woo! What in the world can we say? All right. So that's Carvana, not the market. All right. What? All right. There we go. Oh, there it is. So this is not a good looking candle, guys. And here's it's not the educational topic for today. At least I don't think it is. I don't remember what we've got for today because I picked it last week. Let me see something here. Okay, no, I just don't want to talk of something we're going to talk about in a moment, but no, it's not. Okay. So if we talk about this candle, right? I want you to look at this candle from not just a glance of right now we're up 68 points from where we were on Friday. All right. Thank you, Brenda. I saw it in the manual. So it's not just we're up 68 points right now from where we were on Friday. I want you to look at this as we had a large gap to the upside. How large of a gap was that? It's about where it is now. We're about where we opened. So it's about $70, right? If we look at the Fibit, which is in the upper left-hand corner of my screen right here, Fibit is 2 times the Wilder's average true range, WATR. Right? It's not average true range, it's Wilder's average true range, right? Which it's a slightly different indicator where average true range is high-low close of yesterday. Wilder's is high-low close of yesterday plus today's open. It takes the open into account. I like the open in there for things like this, okay? So if you look with where we are, with where we opened up about $70. We opened up almost the full amount the market moves from high to low in a day above, we had a great move on the open. All right. But where were we? We're still in bearish territory. I don't care how you slice it, it was bearish. We're in a bearish bias with a rank of 3. Okay. So what does that tell me? Yeah, it's a good move, but I ain't jumping on the bull wagon yet. It's just, I'm not there. Okay. Then what? Then we run up and we break through this 66.12 level right here. Nice. Who was in control? And that's the next phase. Where did it open? How does it relate to yesterday's closing price, previous day's close? How does it relate to that? Okay. So that's the first thing. Who was in control on the open? The bulls. Right? We ran up, we broke the next fib level. Wonderful. Severe strength in that. We broke the 8 moving average where it was on yesterday's or Friday's close, which was there. Right? We broke through that. Right? Nice. Second level that we penetrate. Excellent. Good strength. Who's in control? The bulls. What happened? We start pulling back. I'm going to take that line off of the screen and we're going to do a new one. Right? So let me go grab a red pen this time just so you can, the differences. We ran up to this high here, which still kept us in a bearish neutral bias with a rank of maybe 2. Maybe 2. I'd have to measure it. Maybe 2. 2 or 3. Okay? We'll call it a 2. So who's in control or had been in control up there where the red line is? The bulls. Then what happened? Now look at this wick. If we were closing right now, right here, that's telling us unequivocally that the bears have taken control back. We're still bullish, but the bulls pushed it up on a gap, but could not keep it any. And again, assuming we were closed, could not keep it any higher. Did the bulls win the day because we closed higher? Yes, they closed higher, but I would not look at this as a bullish day of we're moving in a bullish direction. Not with the pullback that we've had, right? I would have expected this news of, we're going to hold off on the strikes to have been a good thing in the market. And maybe it was perceived that way originally. Maybe something else got said along the way that someone didn't like, right? Or the market didn't like, not someone, but the market didn't like. But if we close right where we are right now, the Bulls won the day, but the Bears were in control, right? They pulled that sucker back. Tomorrow, and again, assuming we were closed, tomorrow's open would have a massive impact to me because if this is where we close right where we are now, that is a new swing low. So now are we pulling back? And now I start looking at levels. Does it break the fib line? Does it break through where we had closed up the previous day? Does it break through the swing low? Who's in control on the open? Who's in control on the movement? Who's in control at the close? Right? We don't have a close yet, but again, we'll assume the candle we have is a close. You need to measure and look at every stock, every candle, every market this exact way. Don't look at the candle on the right and say it's bullish. We're up 74 points right now. And you'd be right, but you'd be wrong. And I'd go as far as saying dead wrong. We are up 74 points. That doesn't mean it was a good thing. It doesn't. If we close at a near doji candle, the Bulls and Bears fought and nobody won. Nobody won. Now, was it that we made enough of a move and the market just ran out of steam and we held back? Maybe. If our high, instead of where it is, instead of my high being here, if my high would have been here, let's say, instead, maybe. But this move all the way up to here is concerning as far as the bullish move not holding. If we would have closed, near the high of the day, near the higher end of that wick, it doesn't have to be the very high, but near the higher end of the wick, there's a lot more strength to me in that market, in the market, than there is now. Could we bounce? Could this just be a lunchtime blue? Could it be a small pullback because of what's going on with what's happening? Absolutely. 1,000,000% unequivocally, yes, it could be. Absolutely could be. We don't know that yet. But right now, when I look at this, what I'm looking for personally is a potential afternoon trade. If I can move up into the 66.12 and fail, I'm looking at a potential bearish entry off of there. That's what I want to see. Right? And now as we look at it, that 8 moving average is getting closer. Right? So we get enough. It doesn't matter. If you look at, if the 5-minute candle is just going to keep moving every 5 minutes, a new candle is going to form. What that's going to do is my 8 moving average is going to continue to drop a little bit more, not much, and flatten off. And if we can pull up here and fail, we're close enough that that's a bearish bias, rank of 1, and I am Katie bar the doors all over that sucker. Why? Because I trust my system. Could I be wrong? I could be dead wrong. Do I care? No, because I am wrong, 28% of the time. And I'm okay with that. 2-to-1 reward risk ratio. If you did the math, let's say that I'm wrong 30% of the time. I just don't want to do a lot of math. Okay. I got to get this thing saved on my desktop. Where the heck is it? I don't have a keyboard that has a calculator on any longer. So new keyboard, no calculator. So if we're wrong 30 times, and each time we're wrong is $1 of risk, that means we've got $30 that is going to go against us. If we're right, if we're wrong 30 times, that means we're right 70 times, times a $2 reward, that's $140. That's $110 of profit versus it's $110 of total profit, 140 of win, 30 of risk or cost. I'm okay with that. I'm okay with that. When you look at business, right? Who wants to go out to obtain a new customer, spend $10 to obtain a new customer, and they spend $1? It makes no sense for you to do that, right? And that's all they ever spend. Their lifetime value, it's a one-time purchase only. It was something that you had done specifically. Remove a freckle from your arm, okay? And it cost you $10 to get that customer. They spent $1 to get the freckle removed, and they never come back again. Why would you do that? You have no use for that, right? No different in your system. If your system says, I only win 1 time out of 10. Every time I win, I make $1. Every time I lose $2. It's not a system you want to trade at all. Trip said Dow, RUT, and NASDAQ hit the 10% correction on Friday, but the SPX still has $200 left. Yep, still a little bit of room. Something else I noticed, SPX monthly, the last 3 to 4 months look very similar to the 1 year ago, right before the tariff crash. Yeah, patterns are repeatable, right? History repeats itself. Jim said the 200 simple moving average is 66.24.81. The 233 simple moving average is 64.96.33. The SPX today is around the 200 simple moving average and above the 233 simple moving average. Okay, there you go. So it's right in between those two, right? Roman said in capital letters, look left works. Guys, you've got to get good at looking to the left and looking at what that chart's doing. You've got to become a technician, not just a reader of the day. You're not trying to read the tea leaves of what's going on to the right only. You got to look at what's happening to the left and figure out what's already happened, what's already taken place. And it's not just the market, it happens with many things, history repeating itself, right? Yeah, Tripp said history does not repeat, but it definitely rhymes. Okay. Good way of looking at it, Tripp. Good way of looking at it. Okay, let me bring us back in to Omega charts. So, guys, what am I looking at? What I told you, the 66.12 and a fail down to 65.23, 22. If we break out of this, 66.68 is the next upside. I really want to see us get above this second downtrend line, not the first one. That's fine, but that's more of a, yeah, where did we break out a little bit below? That was violated massively here. We broke, came back in, failed big time. So this secondary line, which is this one right here, it's okay. I still leave it there, but I want to see this one. I want to see us get above on a close here. That's what I'd like to see, right? And then we've got the 67.65, 67.58. There's a lot of other things in there, okay? Um, Too much to worry about right now. I'm just worried about, are we going to get above and close into a bearish neutral bias, which is somewhere between the 21 and the 8. If we could do that, I would be tickled pink. Just get me up in there somewhere. It takes me out of being bearish, and I can feel a little bit better about myself, right? I can feel a little bit better about the market and where it's sitting right now. Roman said 200 moving average and 8 moving average are very close to each other. There you go, Roman. Exactly. Exactly. All right. Let's go back in. So upcoming trainings, folks, we've got Inner Circle coming up on March 23rd, which is tonight. March 30th, which is next week. Mastermind Group is tomorrow night, the 24th. Trading You is on the 30th. Inner Circle Quarterly is April 17th. Covered Call Explorer is Q&A is coming up on April 22nd. So anybody that's in Covered Call Explorer, you're automatically registered for that. All right. Power Hour Training Coaches Playbook. Pop, Covered Call, E-mini are all on regular schedule. The Clockwork Income Formula, folks, we've got only 2 left, the 24th and 25th. So that's tomorrow and Wednesday. You got one at noon, one at 8 p.m. Andrew, can you drop that link in? You already did. Thank you so much for that. Folks, go ahead. It's a free training that Tripp is putting on, guys. It's training. It's using time to your advantage. I'll leave it at that. I don't want to give away the hook, right, of what the major outcome or major takeaway you're going to get from it. But it's using time to your advantage. Yeah, okay. And there it is, Clockwork Income. So you can see a little bit about it there. Alex wrote, we've been hanging out in the near 20% pullback level from last year's lows of 4,800-ish to the 7,000-ish. That means $2,200 move times 20%, $440. So 65.60 is the level. You got it. All right. So weekly training topic, the advantage of pullbacks. Guys, any of you that have followed me for any length of time know that I am not a breakout trader. Does that mean that there are not breakouts that are phenomenal? No, it doesn't mean that. It means Rob doesn't do a lot of breakouts trades because they don't work well for me. Okay. And if we take, I don't really care who it is. Let's go to Broadcom. All right. Here's a breakout right there. Oh, gap down, take the bearish trade, go, broke the lows, go, and it's right back up in, right? This one broke out, failed, came back up, and what did it do? It retested before it dropped, all right? This one here, breakout, fail, breakout, fail, breakout, pullback, gap down, no trade there, right? Here was a breakout, came back up. Let's bring it in. Here's a breakout, the wick came back up. Then we gap down, stretched up, and failed. So there's the breakdown, the retest, and the drop. We gap down, came back up, closed here, retested, failed. Right? It works with the fail. Go to Coinbase. Right? We broke out, we came back in. We broke out, so it broke out and failed. Broke out, retested, massive drop. Broke out, failed. Broke out, failed. Right? A little breakout on there, failed. Right? Not much on that one. Costco. Right? One wick, we broke out, we failed. We broke out, we failed. We broke out, pulled back. Oh, that one failed. So that pullback failed. You see how often that's happened? Not a lot. Right? We broke out, we pulled back. Depending on where your entry was, I don't know what this gave us on this day, but you got the move there. Right? We broke out. So that one worked if you took it that day. Right? This one we gap down. So that doesn't really count much. Breakout, fail. Breakout, fail. Gap down, and we ran there. We broke out. That one worked out okay. Right? So for the most part, the breakout itself, to me, I can't get to work right. I can't build a system that 80% of the time the breakout doesn't work. Right now, could that system be taking the breakout and getting out? Could you take a breakout, okay, intraday, and you're watching using my micro day trading rules, which are short-term intraday exit rules, right? And that's exactly what micro day trading is. It's how to get the hell out of Dodge quickly. And I mean very quickly, right? Based on 3 or 4 different patterns setting themselves up, right? So you get a breakout and you jump in. Okay, small entry, one contract, $500, whatever you're doing, small entries, right? You take the one contract, you take the one that trade, and you watch, and you get a nice move to the downside, a continuation to the downside, next candle to the downside, next one to the downside. The pattern presents itself, and it shows that we're running out of steam. It's time to go, right? Get out, right? It's time to get out, right? And you're out of that trade, and now that breakout that happened in here on that wick or happened here, right, was not so bad, right? As far as breakout goes. We look at one more CrowdStrike. Let's see. We broke out here and we pulled right back in. If you took this breakout and somewhere in on the breakout even, you took it and you managed it and you got out of that trade before it got back above that 439 level, you're fine, right? But that breakout didn't work. You took that breakout, you failed. It did nothing. It gapped up the next day, right? This one here was a gap down. That was kind of tough to take. This one here, could you have taken a bullish entry on a bearish pattern? Maybe pulled back and bounced. If a pullback, maybe. But if you took that breakout and got out at the end of the day or when the pattern presented itself, that's fine, right? I'm not saying that there aren't ways or possibilities to trade breakouts. But pullbacks to me give us the advantage that we broke out. Let's say we broke out of a level. Well, let's go back to a chart and do it. Let's look at Meta. Or not. So get Netflix. Okay. So we broke out. You did not take the breakout in here. You waited until it pulled back and rolled over. It took multiple days, lots of waiting, lots of time in there. And it rolled over at 82. And then you got the entry signal, whether it was this candle, wherever it was, you got your entry signal, and it moved from 82 down to 77. Okay, in there. Right? So over a 2-day period, but it moved down to $77. So if you are looking at this saying, okay, I've got a choice of a breakout or let it break, sit back. And what does that mean? Position number one in the chair means you are sitting back in your chair, recline mode. Your hands are behind your head. You cannot reach the keyboard and you're watching. You're an observer, an observer. That's it. Position number two is when we pull back up and now we close on this candle right at the fib line, right here. I'll put my mouse where the vertical line is on that candle. Now you're sitting right at that fib line. I'm in position number two. I am focused. My keyboard's right in front of me. I can reach it easily. Position number three is when I scooch up on the chair where I'm probably leaning way too far forward, pulling down extra weight on the front of the chair, and my hands are on the keyboard and I'm ready to place that trade now. Right? So position number one gives me the ability to still keep an eye on it, but I'm not ready to do anything with it. And just to me, that the actual positioning of my body is a make or break for me of it tells me what the next reaction is. I am not sitting there in panic mode, which I have seen time and time again, where traders are just panicking all day long. They are just in hyper, oh my God, the world's coming to an end. I can't live life that way. Right? I got enough going on in my life, enough stuff in my head. The last thing I need to do is worry about what ifs. What if this happens? What if that happens? Well, if it happens, I'll deal with it. But when it comes to trading, you should have a contingency plan of where you're planning to get out of that trade, regardless of what it is. All right. Okay. Give me some candidates you guys want to take a look at. Jim said Broadcom's daily chart. What pullbacks were you talking about where the daily candle touched or closed the wick? So who was it? You said Broadcom? Okay. Let's go look at Broadcom. So right here, Jim, we had this breakout in here. We gapped down and ran. Okay. Then we pulled back up here and we failed. Okay. This one here, you broke out. You closed here. We went a little bit higher on this candle and then we failed the next day. Right. This one here was a breakout. This is probably the best one of all. This was a breakout. Right? We closed down here. We closed up here after retesting the fib line of 321.42. On the next day, which was on 320, we had a high of 321.51, and this is 321.42. So we came right back into it inside of there. Okay? So I'm not saying they're perfect setups. Just in general, that's the type of pattern we're looking for. The gap down the next day here would not have given us a trade. But that's the retest we're looking for. So Roman's asking for Micron. Let me switch over, guys. So I'm still having some problems with my charts, so hopefully it works out okay for us. See? So looking at Micron, it'll just take a moment for the real-time data to kick in for today. Oh, we got it. 323. Good. Okay. So yeah, so where are we right now, Ron? We're in a neutral bias. I know Tripp is sitting on his edge of his chair as well because he's very much into this stock. We're at 400. So you got a 400 level. You've got the $400.32, which is the 236, which is hesitation. So I'd love to see it back above the 427. But if we break the 400, Roman, there's nothing stopping me from trading this to the downside. I don't use the 55 as a deterrent to say I'm not trading this. 55 is a guide only to me, not a stop or targets or anything like that. You may hesitate there, but that's all it is. Okay. So if we break the 400, 366 is the next downside. All right. Hope that helps. Brenda's asking for gold, and so did Jean. Yeah, my wife is in panic mode right now, by the way, with gold. She's like, oh my God, we should have sold. It's not a short-term thing for me, guys. So our holdings are one thing. She's got jewelry that she wants to get rid of. I don't know, 5 grand, 10 grand worth of old stuff, whatever. Just sell it. I don't really care at this point. But so we've violated the fib at this point. We've got a bearish thrusting pattern. Gold a little bit of a bounce today, but a bearish thrusting pattern today, or bearish thrusting pattern to the downside. Today is the bounce on gold. So I'd love to see us get a little bit more continuation down before another bounce. We've got a new place to draw a fib line off of. So right now we've got to look left, focus on previous levels. So 380 is the next downside. Well, 395, then 380 and 366. On the upside, we're looking at, don't look at the old ones back here if you have ones that are working now. Use your 422, not the 417. Okay? Don't use that. But did it have any value to it? If I put my mouse on that line, look at Thursday of last week. Look at close on Friday. We're right there. We broke through that level on Friday. So there's still value to them. So am I off on the line, Roman? Did it move? So I've got mine on Micron drawn from December 17th, Roman, up to January 30th. 328. I have different data, or did you come off of back here? Let me know what dates you've got. SPY. So fully violated its zero line, a one line. The fibs have done the same thing, right? The SPX has done the same thing on the fibs, fully violated it. So we don't have anything good to work off of. I am not a fan of trading SPX anyway, off of old fibs. I really like to have the newest ones. But look where we gap down and opened here, guys. 642.57. You see why I talk about look left? You already knew that that was where it's contended, could potentially going to. It had violated the 647.30 on Friday. Today we gap down to the next fib line, 642.57. What was today's open? Watch this. Stop. Stay there. Open 642.95 versus 642.57. So 95.57, 60 cents, 95, 35 cents difference was the gap down within 35 cents of that previous fib line. Right? So, killer. So right now, we're back in line with our existing fib. Do I need a fib in there? I don't think so. I checked it over the weekend. 51 to 60 is $9. I do not need a fib in there. Okay. So we're looking at 660 is the next upside. 651 is the next downside. Let's go look at Tesla. And that was Gene. I had Tesla in there. So we haven't violated the 764, which I love. We did on the wick, but I don't really care about that today. We're back up. So we're in a bearish territory rank of 2 right now, if this is where we close. Get me above the 381 retest and bounce, and you're looking at that 398, only on a strong bullish day. But you could see that rollover at that 381 back down to that 360 level. So that trade I like a lot. All right, Micron. So you said you've got yours drawn from January 14th. Oh, so you've got yours drawn here, Roman, off of this wick. Is that your? Yeah, and that's your starting point, correct? So you drew from there. Yeah, I looked if that's and just type it in. I'll gladly read it out. But I looked at this more of the sideways move in here. We'd been down to that level here and here. Right. So I looked at that one candle there as more of a hiccup, sideways, not much happening in there. Was my thought, right? Could you? So you drew off of here. I think you might be. Well, you still got a lot of room, a lot of room in there. There's still plenty of room on the. I was thinking maybe it got too tight from here, but there's such big distances on these fibs right now. There's a lot of room to run. Let's see this. So the ones that are further out, 391, 406, 407, 420. Yeah, I mean, that fib still gives us plenty of room in there. Plenty of room in there. But I look at that one as more of a hiccup candle in there, Roman, for that one. So hopefully that, and I see you said got it. So you understood it. So, but that was my thought on, and again, to wrap things up, here's my phrase of the day, right? Technical analysis is a science until you learn it. Then it becomes an art. Okay. And that's what this is. That's the art, the finesse. where two of us can look at different things and come up with different answers on where we might choose to draw it based on our experiences. Uh, Yeah, so Tripp said I've got the first half as a fib and the second half like Roman. So Tripp's got both fibs, but the ATR has gotten much bigger lately. Right, which is what I was looking at when I said, yeah, we might get too tight in there. And then I went, oh no, we're at 30, 38. Is almost, $30 distance between the 50 and the 382. There's plenty of room in there to move. It's not like putting a small fib in there would hurt that. And that was my initial thought of we may get something where there's only, $5 or $6 between fib lines, but that was not the case when we looked at it. So, all right, clockwork formula coming up. Andrew dropped a link in there for that earlier. So by all means, folks, grab that link, click on it, go ahead and register. It is free. You will always, always, always pick something up at our free trainings. It makes 0 cents not to be there for every single one of them. I don't mean every clockwork formula. I just mean every type of training we do to be there. If you are newer here, you picked up dozen plus tips today alone. You may not realize it till you watch this 2 and 3 times, but you picked up a dozen tips alone. And I guarantee you the experienced trader still picked up 2 or 3 things from today. If nothing else, reminders of the why we might do things. So with that, everybody, make it a profitable day. Stay focused on the quest to becoming a great trader. Keep crushing it. And remember, you're just one trade away. Take care, everybody. I will see you all at our next update. We'll leave the room open for a few minutes. You can grab that link. Ciao, and I'll see you guys next week. Bye for now.